Hey everyone, welcome to Grumpy Monkey Technical Trading. My name is Michael again. For our first ever analysis, I'm going to be looking at Chevron. Oil and gas has been crushed, absolutely, well annihilated to be honest. With Saudi, with Russia, with Iran, there is not a lot of reason to be optimistic. But after all these months, are we finally reaching the end? Stay with me and let's find out. Alright, so today we're looking at Chevron. Now this is a long-term downtrend for oil and gas, so we wanted to look at a long-term chart to get a sense of what's actually going on with the stock. So on this weekly chart, I have about 10 years of data that I want to use to try and figure out support and resistance and determine whether we are ending the trend or still have a long way to go. So I've drawn some support and resistance lines here in advance. This is how I like to start any analysis because you can really get a sense of what's going on by simply defining what I like to call the channels that the stock is occupying. So you can see here that we have sort of the upper channel, and then we had the previous upper channel. It broke that channel and hit it, came back and hit it, but it wasn't able to crack through, and then it was just downhill from there. So where are we though overall? It seems like based on this analysis, we're getting closer to the bottom, right? We're getting pretty close to stopping. Our RSI is in the toilet, which is nice. It's below 30, and let's see here. It's below 30 and it's below really the resistance point. I like to do support and resistance for the RSI as well. I think that's very important. So it's out of that channel as well, which indicates that it's oversold. If I put the Fibonacci lines on, and I use this as a grounding, you can kind of get the sense though that we have a little ways to go. If I fit that across these at the top and this in the middle and this at the bottom, which all line up perfectly, then you don't quite see that touch. So I think at this point that we're either really close to being the bottom, this could be a temporary bottom, or this is the bottom. But we're getting very close to the bottom, technically speaking. If you look at the stochastics, that's in the toilet. That needs to reverse soon, so this week is looking pretty good. CCI is coming back. You don't really care about the bottom peak here. You want it climbing again to indicate a reversal. MFI is in the toilet. And then you don't see it, but the ultimate index here is also in the toilet. So those are good signs for indicating that we're starting to get to the end of a run. Now let's take a look at daily charts, see if we can pin it down a bit closer. Okay, so now we're back with the daily chart. You can see I've defined the channel, the downwards channel. This isn't good though. This is a giant red candle. This is another red candle, and it's breaking out of the chart. So out of the channel, I should say. So this means that we're not in good shape. The stochastics for the daily indicate that we've got, that's generally not conducive to a reversal because that gap is very big as it's getting in under the 20. So I'd like to see that a bit closer, kind of like one of these right here, to indicate that it might break through and reverse. So if you recall, the weekly charts indicated that we had some distance to go before we reversed to get back, and I think that was about at 85 or 86 if I remember correctly, and I think we'll probably fill that. Whether that's for 5 minutes or a whole day or a couple days, I'm not sure. That is the question, but it doesn't look like we're done going down quite yet, but that we're hitting the bottom when you look at the weekly. Now if I look at my Fibonacci time sequence here, so if you're not familiar with Fibonacci time sequence, we can do, Fibonacci typically goes like that for the resistance lines, but we can also do it as a time sequence. So if you go from this peak to this peak, for example, and then you multiply left to right, or for your video this way, then you would try and basically mark instances of the lines as being like that, and that, and that, and that. And if you did it for all the peaks, they would sort of start to bunch up, kind of like the Fibonacci sequence. So I have an algorithm that does it for me automatically. So let's see what it says. For me, it indicates that this week, for the weekly, is looking like it's the reversal, or next week. So we have an 8 and a 7 score, and then nothing after that. So it's either this week or next week. For the day, it's looking at like 2 days from now. So it's looking at probably Wednesday, Thursday as being the reversal. So I could see it just sort of gap down, pick up that mark that we talked about, and then come back, which would coincide with the earnings release, which is Friday. So we are going to be going into that earnings with bad news. We're going to be going in with a terrible chart that may be hitting rock bottom. So any sort of good news should mean that there's a bump up. And that's where I'm putting my stake in. So hope you've enjoyed this analysis. Look forward to your own comments and opinions below. I can't guarantee, obviously, that it's going to bump up or for how long, but it is promising. So let's take a look at what happens in the next few days. All right, thanks everyone. That's our show for today. If you enjoy this video, please like it below. If you enjoy the channel, please subscribe. The more people that subscribe, the more work I'll put in. So I really appreciate your support. Thanks very much. Bye.